First, we need to choose a chart and time frame on TradingView website. I choose the Matic chart and the 15-minute time frame, but you can use whatever chart and time frame you prefer. Next, go to the indicator section of TradingView and search for the Trend Trader Buy-Sell Signals indicator and add it to your chart. As you can see, this indicator automatically generates buy and sell signals. As you notice, most of signals go against the trend of the market. In this sample, the trend was upward, but sell signals were being generated. And vice versa, downward trend, but buy signals were being generated. So by no means do we intend to use these signals. But with some modifications I'll make, I'll turn this indicator into a very profitable one for you. To do so, first go to the indicator settings and in the inputs tab, you must disable the show buy signal label option. But in the style tab, you don't need to make any changes and you can leave the options as their default. Now what's important in this indicator and what produces signals is actually when the price crosses the bands of the indicator. In fact, for a buy signal to be produced, the price must cross the indicator lines upward and close above the upper band of the indicator, at which point you can enter a long position. And vice versa, if the price crosses the indicator lines downward and closes below the lower band, a sell signal has been issued and you can enter a short position. But using this indicator this way has two drawbacks. One is that sometimes signals that are produced are in corrective ways and as a result go against the trend. And secondly, signals are also produced during market consolidation, which we need to fix it. To fix this, let's use a simple moving average indicator to initially identify signals that occur in corrective trends, but we should configure it in a way that shows up trends in higher time frames. To do this, go to the settings and first change the color a bit so it's easier to see. Then change the length option to 300 so we can gain awareness of a longer term trends. Now you can see that all the upward crossing that happens in the downward can be eliminated using the SMA indicator because the price was below 300 MA, so the trend in the higher time frame is downward. So we should only consider a downward crossing as valid. With the long-term uptrend in this example, we should eliminate all downward crossing. As a result of these changes, you'll notice the accuracy of the strategy increased significantly. But there's still one thing left, and that's removing signals during market consolidation, which we can use the MACD Reloaded indicator for. After the indicator appears on the chart, head over to its settings and from the inputs tab, set the short moving average length to 45, long moving average length to 90, and trigger length to 21. Then in the style tab, we only need the histogram option. After doing this, select green and red colors for the histogram option. With these changes, you'll be able to use green histogram to confirm buy signals. and red histogram to confirm sell signal. Now we can easily see the signals that occurred during sideways movement are eliminated by this oscillator. But to be fully familiar with the entry and exit rules, let's review these rules together. So to enter buy trade, we need to wait for a bullish crossing to occur. After this, the signal needs to be confirmed in two stages. First, the trend in the higher time frame needs to be upward, meaning we make sure the price is above the 300 SMA. And in the next stage, a MACD reloaded oscillator needs to confirm the signal with a green histogram. Now with these conditions, the signal is confirmed, so we can now enter a long position. Then find the recent swing low and place your stop loss below it. And then exit the trade when your profit is double the amount of risk. And to enter a sell trade, we have to wait for a bearish crossing to happen. After that, the signal needs confirmation in two steps. First, the trend in the higher time frame needs to be downward, meaning we make sure the price is below the 300 SMA. And in the next step, a MACD reloaded oscillator has to confirm the signal with a red histogram. Once those conditions are met, the signal is confirmed, so we can now enter a short position. Then find the recent swing high and place your stop loss above it. Finally, exit the trade when your profit becomes double the amount of risk. But if you want to know how professional traders are trading in the market and making profits, then you definitely need to watch this recommended video.